What is up, team? Happy Monday to you. There's a lot going on as usual. Some big news from Zillow today. I'm going to show you a chart that I hate, mortgage rates. I'm going to show you the chart that I love, Bitcoin. Show you why. What's the difference between these charts? They almost look like they were inverses, like a mirror images of one another. So we'll go into that. We're going to dive into that, look at several different things that are happening in the world that could affect real estate finance. Tomorrow should be a huge day. First Bitcoin ETF will trade tomorrow morning. The SEC has until midnight tonight to deny it. They've said they will do no such thing. There's been no reason to believe they're going to do such a thing. And so that's obviously very exciting as well. So let me just go ahead and share this. We'll get things cracking. But basically, I don't have good news as it stands with mortgage rates, unfortunately. At least as far as the way the chart is set up. I don't have great news. It doesn't look pretty. It's a rainy day in San Diego today. I wore my green shirt. I was trying. Okay, I tried. But there's only so much I can do. So let's take a look. First of all, Zillow. This is kind of the biggest story for me because a lot of people in the real estate industry have been concerned about Zillow. A lot of people, like myself, have been trying to figure out what in the world is their model. This is from the LA Times. I don't think that Zillow was really flipping homes. I don't think you could really call it that. Even though they were buying and selling, they weren't really flipping. In a lot of cases, they weren't doing anything to the house. They were just relisting it, sometimes for a higher price, sometimes not. It's much more of a market share play. It's much more of a branding play. It's their form of marketing. Listen, Zillow could spend, tens of millions of dollars marketing, their Zillow website on Facebook or on Twitter or other platforms and try to drive people to them. Or, which is, a little bit clunky, right? Because you have to try to find someone who's actually interested in a house. Or you can own a home, have a sign in the yard, and everyone who wants to buy in that area, in that price range, when inventory is low as it is, they're going to see your sign, they're going to contact you. So they're going to go to your website. So I think it's much clearer to me now than it ever has been that is a marketing move for them, and they're not house flippers, and that is exactly why they are taking a break, because this particular mode of operandi, this particular MO, really only works in a market that's climbing because there are costs to sale. So they're constantly having to adjust what they're doing just to get those signs in the yard. And it's an experiment as well. Now it's worked, and it's worked very well. Let's hear what they exactly said. So they said, we are beyond operational capacity in our Zillow offers business, and we are not taking on additional contracts to purchase homes at this time. Can we read between the lines here, team? Can we read between the lines? I know for a fact that they have a lot of homes sitting. Now, part of the reason for that is because they overpaid for homes. I mean, how many times, especially ask my realtor friends, they've seen listings they were going to get. They were going to put the home on the market. Hey, we think it's worth maybe $725. We can get there. We're going to list it at $699. Zillow comes in, we'll give you $775. Huh? How can you compete with that? And this is something that happened over and over and over. So they were coming in there overpaying for homes, and now they've got homes that are sitting. Now, part of the problem is they become illiquid at a certain point. They don't have endless amount of money. They have a lot, but it starts to become a real concern when they have a lot of inventory that's not moving, because if you have to do price reduction on your home that you're selling, that sucks. If you have to do price reduction on 3,800 homes, more than 3,800 homes in the second quarter, if you have to do price reductions on thousands of homes, that's going to sting. It's going to sting real good, and that's what's going on right now. So it's just one of these kind of situations for Zillow, okay? And a lot of people right now are going, and you know what? I might be one of them. Not because I have anything against Zillow. I advertise on Zillow. People like it. Consumers like it. It's a consumer safe haven. It totally makes sense. But everyone knew at some point that this would have to happen. At some point, they would have to scale back. At some point, they would have to go, okay, all right, whoa, hey now. And that's all that's happening. Is it a bad thing? Is it a bad thing for Zillow? No. They may have just gone a little too aggressive here. They're putting things on pause. Does that mean that the market is at a top? This is a question a lot of people are going to be asking. Does this mean that the market is topping if Zillow is saying, you know what, we're going to put buying on hold? Okay. We're going to stop buying homes right now. Does that mean that the regular home buyers should stop buying homes? Absolutely not. This is the opportunity that the home buyers have been waiting for. Get the big investors out of the way, the people who are paying crazy prices, the people who have other people's money that they're buying houses with. Get them out of the way so that Bob and Susie can buy their own home. And this is a good thing for that. It is a good thing for that. The only people this may not be great for is sellers. Some sellers were selling their homes to Zillow and making a mint. That whole party is going to be over with, I think. That whole party is going to be over with because remember, this system that Zillow is using to market themselves, which is what they're doing. They're not flipping homes. They're marketing themselves. Only makes sense if the market is escalating. If the market is sideways, it doesn't make sense. If the market goes down, they could really, really, and I mean really get burnt. Yeah, shots fired. So I do not believe that they are making a bad move here. I think it's good for buyers. I also think it makes sense for them to take a pause because they've clearly gone in too far. They've just gone guns blazing, really didn't know what they're doing. They're trying to figure it out. Does this work for us? How long does it take for them to get metrics on this? It's got to take a while. And then you've got to factor in 20% price appreciation. This is actually, I don't normally share other people's Facebook posts, but Robert Mendeville, he shared this. This is from the FHFA, showing just basically a heat map of price appreciation year over year based on the second quarter of 2022 or 2021, going back to 2020. And you can see here, I mean, obviously the western side of the United States on fire. Look at Idaho. Boise, Idaho is the place. That's kind of where we're looking for like crash wash, right? Like if there's any place that's going to crash first, it'll happen in Boise. So we're really keeping a close eye on Boise. The data, the numbers, it's run up the most. It's a great place, but doesn't make much sense for it to be quite like this, right? And I can tell you this also is averages. Remember, these are average price appreciation in these states. So average in California, 20%. I know plenty of people who've gotten 30 or 40%. Same thing in Missouri. I watched that market very carefully. So same thing in Nevada. Nevada only up 20%. I'm going to tell you right now, and you could save this clip, 20 years from now, everyone will say, why didn't we buy property in Las Vegas? Guarantee it. It's still undervalued. I still think it's undervalued, even though it's up 20%. Same thing in San Diego. Still undervalued, even though we're up 20%. Oregon? Washington? Montana? Probably. Wyoming? Probably. This is some of the most beautiful places in the world. Colorado? Probably. Utah? Arizona? Texas? Probably. So there's places that are still undervalued, right? Even though we're up significantly. And this is the thing that is difficult for the average home buyer to process. It's hard for them to process that it still makes sense to buy something that's 20% more this year than it was last year. That's tough for them to swallow. It's tough for them to understand. So why is that the case? Well, we're catching up to an inventory glut. And it's what I mean by we're catching up is the price is finally catching up to where inventory is. Real estate has been on sale for the last decade, like no one's ever seen. That's why it's been accumulated in such a crazy frenzy. In fact, you know what? Let me do something here. I meant to pull this up. I'm going to go off screen for a second because I actually have a graph that I need to show you. And this is share of homes that are being purchased by investors. Okay. This is no mistake, team. Okay. This isn't just luck. This isn't just happenstance. Share of homes going to investors. Look at this. Here's 2020. Okay. Here's COVID, right? And look what's going on here. Parabolic move happening. Why is that happening? Does it make sense? Of course it makes sense. But why is it happening? Okay. Well, major investors, we're talking about huge funds like BlackRock, for example, which, by the way, Jerome Powell is heavily invested in. We just found out recently. A little bit of a conflict there. Teeny tiny. But I won't go there at this moment. However, the reason you're seeing the parabolic move here, or what can be equated to basically a parabolic move in investors purchasing property, is because pieces of paper are becoming worthless. When money is printed at the level that it's printed, when we go into debt at the extreme levels that we do, first of all, it makes bonds almost worthless. I'm going to show you the bond chart in a second. Ugliest thing you'll ever see, but it is what it is. I'm going to show you. I'll show you the Bitcoin chart. Beautiful, thing of beauty. And you'll see what the difference is, what it looks like. Clearly bonds out of favor, and the Fed hasn't even started tapering yet. There's still a huge buyer, and the chart looks terrible. I mean, it's not good, team. prognosis for mortgage rates, not good. Not good. Like as soon as you get a loan in or as soon as you decide you want to refi, you just need to lock. You just pull the trigger, just go right now. This, however, I think is a trend we will see continue. Now, hey, Derrick, you just told us that Zillow's making a pause. Zillow, while they did buy 3,800 homes in the second quarter across the nation, it is a pretty large amount, and they will be putting a pause on things for a little while. This trend it happens just like anything else in any market. You see this parabolic move, we're likely to see a recession, okay, back to about 50% of this total move before it moves higher again. Why is that the case? Because they're going to overdo it a little bit. They got to figure some things out. What Zillow's doing, and we'll go back to that real quick. What Zillow has done and what they are doing is they are paying for information. And they've gotten away with doing it at a very low cost because they're able to buy these homes, sell these homes, sometimes for a profit, usually for a loss probably, but sometimes for a profit. They're also able to use the marketing mechanism for these homes to generate additional revenues with their partner agents, whom we know and have seen on our channel before. They're able to, just use it as a marketing spin. They're able to make money in some cases, but most importantly, they're able to gather information. So gathering information and market share. They're gathering information about what is happening, what buying activity is happening in different areas and where they should be investing, where they shouldn't be. They're getting all sorts of data, tons and tons of data. So while they may be taking a pause now to evaluate that data, while they may be, taking a step back and going, we have enough homes now. We operationally can't handle this. We need to just chill for a second. This is not a bad thing for them. This is not a bad thing for the market. It's great for buyers in the market. It may not be great for sellers. We'll see. But it's definitely good for Zillow. It's a smart move to make. And they continue to make smart business savvy decisions, and the real estate industry, myself included, continue to fund it, even though they're clearly trying to compete with all of us. So it is what it is. But this happening is, you're going to see, when they redeploy this, whenever they do it, they'll have a lot more information on it. They'll be a lot more savvy about it. They'll be a lot more specific about it. It won't be a cattle call like this last one was. It won't happen that way. So that's my expectation with what's going on with Zillow. What's my boy Anthony Ramirez have to say? Don't forget, Zillow's third-party services are pretty horrible to work with, especially for us in the business. Was not like a normal friendly transaction. Anthony, are your transactions normally friendly? Tell me who you work with, brother. I'm just kidding. The third-party services where they're making the additional money is, of course, going to be, it's going to be staffed with the cheapest staff they can get. I mean, that's just the way that business model is going to work. But all right, so you guys ready to look at an ugly chart? Let's just go there. It was worse earlier in the day. I mean, at one point today, I was looking at this chart and this candle was red and was all the way down here. Okay, so we saw that today. And basically right now, the overall trend in mortgage bonds just lower. I mean, it's just lower. There's the big trend. Okay, and this is always, I call this a cascading downtrend. So you have a bigger, more zoomed out macro downtrend here, which is drawn with my green arrow. Then you have one that has more of a slope right here. Okay. And then now you've got an even greater one forming here. It just keeps cascading worse. Reminder, the Fed is still buying bonds here. They're going to start slowing that down next month, most likely. So the prognosis here, remember, when bonds go down in price, interest rates go higher. So right now, the prognosis for interest rates is just higher. So if you're getting into contract on a purchase, my suggestion is just pretty much lock right away. It's, maybe you get a chance to float if you have a big green candle and you want to see what happens the next day. But right now, it's very fragile. And clearly the market, when I say the market, I mean the market makers, i.e. Wall Street, big investors, etc. They are moving money out of paper, stocks and bonds, moving it into hard assets like real estate, and also, that's right, Bitcoin. Let's look at a great chart here. Okay, so my prognosis right now for rates is not great, and there's no way to sugarcoat it. Actually, a lot of action happening right now. Oh, really? Are you guys stymieing me for real? Well, anyway, so I won't be able to draw on this chart because they're stymieing me to log in, and I want to go through that with you right now. But bottom line, here's Bitcoin's chart. See here, the flush out back down to 59K, okay, creates a low, a new intermediate low, which is right at that bounce off point. I'd love to see that for continuation higher. Then we have a higher low, higher low. I think we're making a new all-time high here. All-time high somewhere around 65,000, I think high 64,000s. I think we're going to go make a new all-time high here, and then we'll see what happens from there. But this looks really good. This looks like it's going to move higher. Even though there's been resistance up here, I was just watching the price action up here, and there was a big short that dropped in at 62 and tried to knock it down, and it's already running into some trouble. So someone's trying to short the market right now, and they're going to get burnt. All right, gas prices up 100% over the last year. So we talked about this, as soon as this new administration came in, what did I tell you to do? The very first thing I said to do was to buy oil. It was at $45, 82 today, 82. Who's a Rain Man fan out there? I know, I'm hilarious. So we now have $82 oil. Gas prices have gone up significantly. That's typically not a good sign. It certainly leads us to believe that inflation is here. But wait a minute, Derrick, inflation can't be here because gold isn't going anywhere. Gold is garbage. I hate to say it. If you own gold, I would sell it. Get rid of it. It has been at 18. We've seen inflation. We've seen market dips. It's just not going anywhere. It's not going anywhere. One of the problems with gold miners are constantly mining new gold. There's no limit to it. That's one of the benefits of Bitcoin. There is a limit to it. Today, the markets are relatively flat, except the NASDAQ came out pretty well. Tesla, obviously, doing very well. Tesla is just one of those stories that just won't go away. The 10-year up at 1.6%. That's actually, for a lot of major funds around the world, if you look at some of the, the other treasuries of different countries, they're under 1%. Some are negative. So us at 1.6, that's pretty sexy for a 10-year. Just globally speaking, I would think that buyers would be jumping on that. But people don't want paper anymore. That's what we're seeing. We're seeing basically a shift from paper. And here's a couple things that you should know as well. And then I'll give you one sort of bonus article to check out on your own. The expectation is that mortgage originations will drop about a third in 2022. Interest rates rise. Okay, this is sort of a foregone conclusion. Everyone expects this, right? And this is according to a forecast of the Mortgage Bankers Association. There's some interesting numbers in here. You can check it out if you want to. They're really expecting refinances to drop a lot because rates are going to go up. So, when people are buying, the question is that I get is, well, if rates go up, won't prices come down? That's what people are asking. If rates go up, prices should come down. And that makes logical sense. But if you look, and I'll pull this up. Maybe I'll do it this week. I'll pull up the data again, do it every year or two, and we'll look at it, and you'll see every time rates have gone up, prices have also gone up. It's a weird backwards psychology thing that I can't explain to you, but basically think about it like this. If I told you, and I see it with refinances where I tell people, as rates are going down, hey, are you 2.5? Oh, hey, 2.375. Hey, you're 2.25. And they don't do anything until I call them back and say, oh, it's back up to 2.5. And they go, okay, lock it in. So people will wait until it goes up to do something frantically about it, because while it's going down or while it's staying low, there's no urgency. So when rates go up in the short term, there all of a sudden becomes great urgency in buyers, and you'll see that carry out for 3 or 4 or 5 months. So it really depends on where are we 6 months after rates rise. That's what I would like to see. That's what I would like to know. If I had the crystal ball and I could beg for any piece of information, that's what I would want to know as far as how our price is going to be affected. Because I think in the short run, prices will go up because there will be a run on real estate as if there already isn't one. Homebuilder sentiment also bouncing back. Even though there's supply chain issues, the reason why you're seeing the sentiment increase, only went up 5 points, but hey, that's quite a bit, is because they are finally, getting to the supply chain problems are one thing, but the sentiment bouncing back has a lot more to do with just the executional ability for home builders to be able to sell projects. So they're able to sell these projects long before they're completed, which is great, except now you have to deliver. And it's not easy. It's not easy to deliver. So there's a lot of, you saw home builders sort of taking a pause as well a couple months back. That was because they were having a hard time executing. You get into a contract with these people, you tell them, okay, your home's going to be done in December. I had one that was supposed to be done in August. It's October. They're telling them January now. That's 4 or 5 months difference. That's a lot of logistics, a lot of stuff to deal with from a loan standpoint, from a real estate processing standpoint. It's a lot to deal with. So the fact that their sentiment is increasing, they're feeling like they can sell their projects, that's a good sign. Trust me. And the supply chain chaos, for people who don't know what it is, they're like, what is it? Why do I keep hearing supply chain? What does this mean? How does this do anything for anybody? I got an article in here. You should check it out, okay? Because when we talk about supply chain, obviously a lot of things stopped because of COVID for a long period of time. And we had, a little cushion. We had a buffer of a lot of these things. That buffer is gone. Those things are wiped out. And now trying to get things back up and running while maintaining certain regulations. There's a lot of companies mandating vaccines or whatever, people not wanting to work as a result of that. All those things are going to compile. So this is probably going to get worse. And that's where, it makes sense to, I think I said this a couple of months ago, stock up on toilet paper. I'm stocked up. So you guys go have fun in the store if you want. But there's going to be more issues here. And this just makes prices go higher. As we talk about an inflationary environment where now we're going to have continued supply issues with everything, it affects everything. If the trucks aren't on the road, we're short of everything, including the lumber to build houses. So just keep that in mind when you're looking at prices of things, when you're considering purchases, et cetera. Right now, there's definitely more issues coming, which is likely to push prices higher than they are at the moment. So I just want to make sure everybody's aware of that. Questions, want to buy, want to refi? NMLS 155010, call, text, email me. I'm happy to help. Hopefully this is good for you guys. Share this video if you want to make your friends smarter than everyone else. And I will see you all soon. Take care.